We'll call to order the finance meeting for Thursday, June 9th. First action item is approval of the minutes, and we will table the approval of the minutes as Counselor Levine wasn't at the last meeting. Move on to the update on the bond anticipation notes.
Okay, we wanted to do an update for you on the band sale. We have $2.2 million bands that are coming due at the end of July. So when we come up to the end of July, we're actually going to add on an additional $2 million on that for the road referendum. At this point of that $10 million road referendum, we're expended about $4 million, so we would like to put in an additional $2 million on those bands for the next coming year. And we've put in the packet for you a schedule of what we'll be doing to prepare for those notes. So at this point, we're actually right along with the calendar, actually a little bit ahead of time, and we'll be reviewing the draft OS in the next week or so. We've already sent our comments in, and it's about to be prepared for us. So it's $4.2 million. We'll probably have an additional expenditure for that in the budget we put for the $2.2 million, but at this point, we'll add the additional $2 for roads.
And then we'll keep the bands for the year, and then the following
1 year.
year, we'll go out and then issue a bond as we probably add another $2 million
Right.
for the next
Well,
round
yeah,
of roads.
Exactly, assuming that we have that high school project finally closed.
Right.
And that's really what's been allowing us or requiring us to keep rolling it.
Okay. Any question on that, Jeff?
Not this time.
All right. Move on to item 3, update environmental fees for NIPS.
We inserted some information on the possible uses of the NIP money. We mentioned at our previous Finance Committee meeting, we received our first NIPS payment. Those are for the little NIP bottles. Environmental refund, I believe they're referring to it. We received $11,220. That was for the first 6 months. So assuming we keep moving forward at that rate. So the highlight that we had pointed out is that it has to be focused on solid waste. For example, the recycling coordinator, storm drains, street sweepers, and so forth. We may focus on the recycling coordinator. It's been a topic of interest for us that we've been working with the Sustainable Connecticut and focusing on how to move forward on the trash collection. So that may be our primary focus at this point for the use.
And what's the definition of vacuum?
Of which?
They note that we could mechanical street sweeper, vacuum, or broom that removes litter, including but not limited to such beverage containers and other debris from streets, sidewalks, abutting lawns, and turf areas. Do we know what that, how loosely defined that is?
Probably not really, but
No.
I would tend to think it'd be those ones you see in the cities or after baseball games where
Yeah.
it's like a big vacuum cleaner that some guy pushes down.
Or would
That would be
something,
something that'd be
Piece of
used in
equipment.
on the outside.
right, would we be able to use something like that along the line, double use for trash pickup as well as leaf pickup as a giant vacuum?
You can ask Public Works.
Uh,
I don't know.
Well, I was thinking of more things with wheels and he just walks back
Right.
and
Well, this
forth. I
would
don't know
be-
how good it would be for leaves, but
Right.
probably you could do it for leaves on like around the buildings.
Well,
Type things.
we did have
Mhm.
an item on the capital improvement budget
Right.
that we didn't put through that was a leaf vacuum. But would it also be able to qualify here and use it for trash pickup? I don't know the capacity or any of the
Yeah.
details. Just maybe something to look at.
Something to look at.
Leaves considered debris, other debris, can you?
Let's look into it.
Well, as
Look
long as
into
you
it.
keep it out of the waste, solid
Out of
waste
the
stream.
drain, right.
Right.
Oh,
Yeah, you're looking, that's what you're looking to do with the leaves, you
Yeah.
don't want them to go, yeah.
Just maybe an option down the road if
Mhm.
we're looking for,
Do
is
you
that
remember like what kind of dollar amount that would have been?
50-ish? Was it in the
Yeah.
50,
Right,
55,000?
closer to 70, I think.
Oh, was
we
it?
had,
Okay.
Yeah.
Oh.
So it might take us a couple years. or a
or,
lot of NIPS, or at
But
least do a
you-
partial.
You posted the revenue and non-reoccurring, or did you?
No,
put it-
it's on our special revenue list.
Special
in
revenue
fact,
list,
as
okay.
a highway
So it's-
special
it's
revenue
not in
grant.
the general fund, so.
right,
It has a life.
It does have a life, it can roll over.
Doesn't die to the fund balance at June
Yep.
30th.
okay, so just something to keep in mind as we go
It
forward
is.
for it. Okay. And then our next item is discussion, possible action, tax refund.
So, yes, we do have a tax refund, and Stuart Topliff, our assessor, will explain this one. This is kind of an exception to the rule, and I don't want to steal Stuart's thunder, but as a rule, we don't do refunds on the stipulations, and I'll let you go.
Yes,
further.
we, as a general rule, do not give refunds. We give credit to future payments. In this case, it's the Ames former headquarters. Essentially, they would not agree unless we agreed to give them money back. And it needs to be given back in order for the property to sell.
Okay.
So, because the current owner filed the appeal, they didn't want the new owner to get the benefit from it. So, in the stipulated agreement, in order for them to agree, we had to agree to refund them the tax payment as opposed to give them credit to future payments.
But go a step backwards. You mentioned there's an appeal, so do you want to give some of the detail to how we got to the?
Well, they appealed their assessment from 2018,
Okay,
and we settled it a month or two ago. Part of the stipulation was that we refund it as opposed to give credit to the future.
okay. But what committee where did they do the appeal? Just-
With the Superior Court?
Oh, so it went through the court, and this is the court agreement?
Right.
That this is the refund due?
Yes.
Okay,
Yes. We went to the tax court, and this is the agreement we came up with.
okay. That's what I was trying to get to,
Okay.
just kind of the background to how we got to
Yeah.
a refund.
So sort of a negotiated deal between the two parties,
Correct.
wasn't a judgment by the judge.
Correct. We agreed to this settlement as opposed to going to trial.
Because normally in this circumstance, you would keep, the credit would pass to the new buyer, and then the buyer would pay the seller.
Right.
But they don't want to do that, is what you're saying.
Right. They don't want to give the credit to the new owner, and they don't want to make an adjustment at closing for the tax credit. They want the credit now, and I can't tell you absolute that it's holding up the sale, but they're waiting on their refund to continue to move with the sale.
I mean, whether we write a check or give a credit, we're giving the money back in one way, shape, or form.
Right.
With the tax appeal, we are, but we're not. We give it credit to future payments as
Yep.
opposed to having to give them a refund, because
Right.
Right.
when I do a settlement or I try and protect the town's current cash position.
Right.
We can adjust the future,
Right.
but any refund hurts us today.
So if they were to keep this as a credit, let's say, how long would it take till they use that credit up? I mean, I don't have no idea what the actual tax bill is, so are we talking like a few months, or?
For the 134,000, I think it would have rolled into just over 1 year, wasn't it?
I'm trying to think what probably 2.5 years.
Okay.
Because of the value that we settled at. We settled at their contracted purchase price.
Okay.
They wanted much lower. They wanted
Yeah.
significantly lower, and we settled at their contracted
Right.
purchase price, as opposed to spending more money on trial. So,
Right. Yeah, I mean, that's the market if someone bought it, so. We don't have to go.
the big picture is the town wants the property redeveloped,
Right.
and this tax appeal was in the way of it being redeveloped.
Right.
So in the interest of the betterment of the town, we came to this agreement, as opposed to, You know, if the redevelopment wasn't pending, you know, we probably would still be fighting it out. But because what's being proposed and what's coming is a lot better than what is there, I think that the people in the town really want that monstrosity to
Right.
go away. And the sooner this case was adjudicated, I think the better off the town was. And ultimately, that was what weighed on our decision to make the decision we made is, okay, all right, we don't usually do this, but in this case, we'll make this decision because it'll move this project along.
Right. So will this be in the current fiscal year or the next fiscal year?
Unfortunately, it is in the current year, and I think you might have seen in the financial report, the timing is very poor. It's at the end of the year, so we really couldn't plan for the impact of it. So it is in this year, and it's going to affect us in June. And that is probably the really terrible part of it, you know, that ordinarily these would have become credits in future years, and finding this and have it occur at year end is probably not the most opportune
We
thing.
can't pay like half June 30th, half July 1st.
You can do whatever you want.
It would still
But
be.
it's still
Well, I mean,
on
to
the
be, to
accounting
make
side.
everybody, and they'll be happy with it, I'm saying.
Yeah.
Yeah, but it would still, because of the stipulation, be recognized as a refund in the year that it's stated in the
Yeah.
stipulation. So
Your
it's
accounting
still-
rules probably say it has to be charged this year, but when you actually pay them,
Well, I mean, there's the accounting and there's the cash flow. There's kind of
Right,
two different things.
yes,
so
the
that's-
cash flow isn't the issue. The accounting impact is not a good thing for us.
So when you say it's not a good thing, what's ultimately the result of?
Well, I'm kind of doing a prelude to the update on finance,
Oh,
but,
so, okay,
but
well, we
basically, I'm gonna.
That's called the cheese in the business.
It
so
is
we'll-
indeed. But it will have an impact, because we are close to balancing the revenues to the expenditures are very close. This will bring that margin of closeness to be a bit of a
Close,
challenge.
closer.
Thank you, John, that was very good. Yeah, but it is. I mean, we're looking at the tax collections are probably a couple $100,000 under budget, so this will just bring it like $100,000 less than if we're expending the expenditure side to close to 100%, which it looks like we very well may be. We've got a lot of things going over, fuel and so forth. So this type of a situation, you know, will not give us that margin that we need, you know, from transfers from fund balance and ARPA and so forth, so.
Right, and as a result of the transaction, there's a conveyance tax that we will get, is that true?
If they sell
Yeah.
before the end of June.
Does that help
hopefully-
the situation for us?
It will, but it'll be a smaller amount. I think we were estimating at about 10,000, I think was our calculation.
Okay.
yeah, I think the negotiated sale price is $2.25 million. So it's whatever the conveyance fee is on that, as opposed to the $73 million sale on Burris Logistics,
Right.
Right.
you know?
Yeah.
It's probably more like 20,000 we'll get.
So, I mean, but in order for them to settle, they were adamant on getting the refund. Otherwise, they weren't willing to settle at the number we settled at.
Okay. And John, consent agenda?
Yes.
Okay.
Yeah.
Do we need, okay, so, with that, I'll make a motion, that we send to the consent agenda a resolution to allow the refund, a tax refund, totaling $134,740.66 to be paid back to Mr. Rocky LLC, care of the Gibbs Firm, LPA, 2355 Auburn Avenue, Cincinnati, Ohio.
I'll second. Any further discussion? All those in favor?
Aye.
Motion passes. New item on the agenda is our update on the special revenue fund.
So, yes, a new item. We've got a lot of information on this one page, but overall, within your CAFR, in your audit report, you'll see a section called Special Revenue Funds. These are the type of funds where you can do donations, fees for service, and the expenditures have to be for the same purpose. So they have to be tracked for audit reasons with a fund balance as well as the revenues, expenditures, and they don't have a budgetary year such as the general fund. They will roll over from year to year. They get audited separately. That's why they do have their own fund balance. So we've identified those. I will say on this list, these are those special revenues. If you look back to the audit, these are the ones that are in the town. There are some that are Board of Ed that we don't report on, but they will become part of the audit. If you look at that, which would be their special grants, their student activity fund. So I'll focus on those that we report on from the town side. So it's a lot of information, but I'll just do some quick highlights on those. If you have any questions, just feel free to stop me as we go along. But we have, for example, the CDBG is a small cities fund. That is a federal pass-through. At this point, we haven't had any activity in that since 2018. There was an organization that was overseeing this particular grant. This is also a tri-town. It was Rocky Hill, Weathersfield, and Newington. When the organization that was overseeing it just was not participating, and the grant stopped at that point. The funds are still there. We were the ones that were overseeing the project. So we have Ray Carpentino trying to reach back to them and see if we want to kind of bring that back into activity. It was for rehab loans for the 3 towns. So,
If that doesn't come back, is there a way to reallocate that to the regular general fund, or?
no, because in a sense,
Give
it's
it
not
back.
our funds to
Or do you have to give it back to
reallocate.
the government if we don't use
Yeah,
it?
it was
They should
like
ask for it back
a
ideally.
grant from 1998 or
Yeah.
99. And it was like, as Mona said, 3 towns. So they would borrow money and fix their house up or whatever. But then when they go to sell them, they'd have to pay it back. So that's why we have a balance there, because they paid it back. So I think it was handled by CROG for
Frog for a while, then Wagner.
And they had some changes and so on. They don't really do much anymore with it at all. So if it does go back, I think it has to go back to the federal government.
Next is the industrial park development. That had activity back in 2005, and I think that may speak for itself with what's happening with the industrial park. Not a lot of activity at this point, but it's available for that purpose, anything that's in that realm.
For any industrial park in town, or is it restricted to a specific project?
Industrial park down here,
Which one, down
the one that's not, they've been trying to develop for years.
in the sand pit?
pits.
Yes, okay.
That were there.
Special revenue, bullet 5.
5, okay. I made it in time for the motion to adjourn.
Actually, we got to go back and untable the minutes, just because Jeff wasn't at the
Oh,
last meeting.
okay.
So, we needed you. Welcome.
Apologies for my tardiness. I got tied up for a work matter.
Okay. Next, we have this recreation program. It has a large balance at this point, $300,000. Within that fund, there are kind of programs within it. That would include anything in the Parks Department. It's the Summerscape Camp, it's any of their activity programs. It also, because of the way that their cash collection program has been set up, still includes the collections for the senior center. Although within that fund, the collections are separated. It tends to, at the end of the fiscal year, be large because we're seeing around May becomes a large collection time for Summerscape, for the campers. for a lot of the programs, the boat launches and the aquatics. So it tends to, and you'll see with some of these grants, they have different peaks and valleys, something we're not used to seeing necessarily on the general fund, just more of the activity of what happens with the programs. So this one will tend to peak toward the end of the year, and then it'll go down toward the winter. Also for insurance loss, this is the fund for any insurance claims that are non-workers' comp, so anything liability. So if we, for example, I had recently a water main that was at the high school break. We send in the claim, funds come in to reimburse, we have to pay the expense out. So at this point, we have $69,000. We do have in there a reserve for heart and hypertension. And I think at this point, we have pending actually another water main at West Hill for a check coming in. It doesn't happen often, but I had 2 water main issues within the same fiscal year.
Maura, just go back to the recreation program for
Sure.
a second. Roughly speaking, what's the lowest that balance ever gets?
Well, it tends to get down around like 150-ish. I think it's had this, and again, I think I'm seeing a trend in some of the others because of COVID, that we would have points where they would have either donations or collections that would come up, but the activities didn't happen. So we're finding, and I think we'll get down into like youth services and human services where they would get contributions and donations for programs. Programs didn't happen, so that they tended to run up a little bit of a balance. So we'll see the special rec it can actually drop down close to 100 or so. We don't like them to get much lower than that because it needs to build a cushion for future expenses.
To me, I'm not used to this, but it sounds like those are kind of two very different things. Should they be broken out into separate special revenue funds? The Parks and Rec, Summerscape and all that stuff versus like donations for seniors and, that sort of thing?
Well, they are. What I'm showing you is the summary. It would
okay.
be as if I was telling you
So there's
the general fund, and I gave you one line that said
Okay,
the
so
general
these all
fund is
break down
90
for-
million.
okay,
Right.
gotcha.
I think
Okay.
you have broken out by 4 or 5 different
There's 5.
Oh, okay.
activities.
Yeah.
And when it was originally set up, it used to be managed by each one of the departments,
We still-
Parks Department supervisors.
Right.
So whatever they would oversee. And then what you're basically saying is, the beginning balance is when they had a lot of money in for Summerscape, and now you're seeing their balance year-to-date is the amount of money, primarily Summerscape, but they do have other programs going on.
Right.
And then, so like the basketball programs, the referees would be charged against this and so on. So-
Gotcha.
And in fact, they do have, like, so there's 4 or 5, and there's one that'll actually just be what they refer to as sponsorships, where there are those large donations, and then it can be determined by, for example, the Parks Director, if they want to put something into try a new program rather than Summerscape gathers its own and does, fee for service. Sponsorships are available for whether it be advertising or whatever there. So they are categorized.
Great. Okay, thank you.
Library operating is a smaller one that doesn't have subcategories within it, and it's just used for any donations for the library department. Occasionally, she gets a small grant through the state, and that's for any supplemental materials that they're interested in. This one actually is a little higher than normal. She was using some of her ARPA funds to get some of her equipment, so we know that she's working on some plans for the upcoming year for the remainder of that balance. The dog fund. The collections are probably more sporadic. It's more of a fees, an occasional donation, and the expenses tend to be more of a steady pattern. It's the amounts that we have to pay to the state, any veterinary bills, and that type of thing. So you'll see the revenues tend to be more on the lower side. Expenditures tend to stay a little more consistent.
And Mona, the dog fund, does that have anything to do with the dog park? Or is it completely separate?
No, it's just animal control.
Animal control, okay.
Animal control. Asset forfeiture is for basically any of the drug-related cases. Actually, it can be any case, not necessarily drugs, but any case where there's any type of assets redeemed in the case. The goes through the state and then goes to the federal level, depending on, the type of case. The funds will eventually come to us after the case has been reviewed. And it's a cost sharing in some situations, whether Rocky Hill helped out a case in Hartford or it was, so we'll see the revenues tend to come in sometimes in a bit of a lag time. Actually the lag time in reimbursements on costs been running about 6 months or so. And it also, if it's a very in-depth case, will reimburse for any overtime that's required for the detectives.
And that money has to be spent on policing.
Yes, only police enforcement. For the town clerk, with the town clerk and recording and filing, there are, within any of their recording, there's, each recording fee has components to it. So in each fee or each type of record that you're recording, there is a portion of it that can be put to a different fund for the purpose of the town clerk department, and also for paying, of course, paying back the state. So this is the fund which will gather that amount of money. As we know, we've seen on the general fund, some of it comes right to the town, and we see it as recording fees or conveyance fees. These are the portion that goes to a set-aside to pay back the state. In some cases, it's $1 per recording. I won't do their fee system justice, I'm sure. And they can also keep $1 per recording, for example, and put toward the town clerk. And this is where you'll see them be able to do things such as the great things she's been doing with laser fishing and so forth.
So, Mona, it was always my assumption that the money came in for things like that, general revenues, like, recording fees, would just go into the general fund. I mean, so I'm a little late to the party here, so forgive me if this has already been explained. So how is it that some of that money apparently is earmarked for as special revenue versus some of it just going into general operating?
It's really determined by the state. They've got some pretty strict guidelines that says, that actually tells them this is how much you charge for a recording. Of the recording, the town has so many dollars. That's what you'll see on the general fund side. Then of this piece, you'll have to send so many dollars back to the state. And then, you get to have whatever, $1 or 50 cents, whichever it is, that can be used for the town clerk as a town clerk fund.
Those are
So-
recording fees. And then the conveyance tax, there's a state tax and there's a municipal tax. So the share that goes for the town, that's just all into the general fund?
That's the general fund
General-
piece.
Okay. But the earmarking here is because of basically state requirements? Okay, thank you.
And that's for anything, dog licenses and, so it gets spread out into quite a number of funds that they have to do. It's a lot of accounting to do one document.
Understood, thank you.
But they've got a very sophisticated software as well.
And Mona, just following that up, what type of expenditures do we see on the town clerk side that would not be in the general fund? Just as an example,
Yeah.
trying to understand
Yeah.
what's a general fund expense versus a special revenue expense.
Yeah, and the majority of that is reimbursing. For example, that 32,000 is reimbursements to the state.
Okay,
So they'll say set aside, and then you're reimbursing, $1 for every, document, submitted, or, whatever the
License.
fishing license has to go in. Every dog license has a piece of it. And like I said, there is a piece that she gets to keep for the clerk's office. If there's a balance, which we can see a balance available that they can, usually the balance accumulates for maybe 1,000 or so per month. This is actually accumulated for a while, and we're seeing the town clerk now wanting to do things with it, such as laser fishing and what do they call it when they put the books together? I'm not a great town
Binding.
clerk. Binding, thank you.
The-
Yeah.
Okay, thank you.
Okay. Human Services. This would be kind of the similar situation with the special rec program. They have some subcategories within that, but the largest component would be the welfare revolving, which is where you'd find your food bank, and so forth. They have homemakers, which is a smaller piece of that. And as I think I mentioned before, where we've seen the impact of COVID, this department is probably one of the, and the following one, Youth Services, where they were getting a lot of donations, especially during COVID. People were very interested in supporting the program, but the activities weren't really occurring. So they had a couple of years, if I looked back, it's like $50,000 of donations, no activities because of, obviously what was happening. People were getting from conversations we've had with Human Services, they were getting stimulus checks, the needs weren't there to come here. What they're seeing now is more of a need for people coming in, because now the stimulus isn't there. The need's coming, and they're starting to see the drag down on the balance. So although it's high at the time, the conversations we've had, that they've got some good plans going on, particularly in the area of evictions. In the general fund, we have, for example, I think budgeted $5,000 for evictions. They anticipate that would probably cover one or two. But now that they have evictions, for the past 2 years, people were not being evicted. Now that that's been lifted, they're anticipating that we're working with Public Works, seeing if they can find a trailer or something like that, make arrangements, get a moving company. So they're expecting that there's going to be a good plan on using these funds, and we'll work closely with that. She's also got, we'll be taking the $56,000 or $58,000 that we had discussed during general fund budget review out of that balance. So at this point, that's still in there.
Well, and every so often, for example, a family will suffer a catastrophe like a house fire or something, and then we'll get out, if you want to help the family, make a donation through Human Services. That's the sort of thing that would go through the Special Revenue Fund?
Exactly.
And are there like sub-accounts set up like for the specific families that those donations are earmarked for? How does that work?
Yeah, not by family. They have it more by the category of, like, this is their welfare revolving, and this is their homemakers program. So they have it more by their program, not by individual. I imagine within their department, if they're tracking by individual, that would be within the department. But on the financial system, we don't get to that level. We wouldn't put individuals' names in our financial system.
Not at your level, but at the
their
department level, though, they may have their own
Oh,
record keeping, so that people are donating for such situation. There's a tracking process to be sure the money gets where it's intended.
Right,
Okay.
at their level. In youth services, they have funding sources from, and then they have donations. They've also got, what they have is Project Graduation. I'm sure maybe you've all heard of Project Graduation. They do a lot of fundraisers, and that stays for the purpose of Project Graduation. Probably of that balance, you've got about 1/3 of it to Project Graduation. And again, with the subcategories, that line is separated for that purpose alone. Better know there.
The town sort of got
Yeah.
assigned to handle Project Graduation. I think we always wanted to try to switch it back to the Board of Ed's responsibility, and maybe even set it up as its own 501c, so that everything flows through that 501c for the Project Graduation. As of right now, everything for Project Graduation, collections and expenses are paid out of this line.
Okay.
Other schools, generally, they have the junior and senior class parents usually run the Project Graduation, and then, and so on, and it's usually not run through the town.
Yeah, it would
But-
usually be a student activity, which would be monitored by Board of Ed and not one of our funds. So it's an unusual arrangement to have this continue at this, so something we've always wanted to keep working on with the Board of Ed. We haven't been successful yet, but we're not stopping. Also within this youth services are some grants. She has maybe 2 or 3 smaller grants. They have youth enhancement grant, mental health and addictions service grants. So these keep separated again, subcategories within the same fund. For police grants. Again, they get occasionally some grants that are just police-related. This fund, allows us to keep track of those. This year, they had 2 so far. They had a JAG grant this year that allowed them to put some extra overtime out on the street for COVID-related, and that was basically a lot of the car thefts, so that any of the overtime that they had put in for that. So for example, that $30,000 that you'll see for expenses, those would be overtime dollars that would originally be in your general fund budget. When the JAG grant money comes in, we take it out of the general fund and apply it to the grant. So these are some of the great things. They also had a smaller grant that came in that allowed them a mid-state, so it was like 5 towns together shared for a scanner. So that's the 10,000 in there. We have a lot of grants.
Yeah, Kenny's having a good time back there.
I know. Should I go quicker? The highway department has a couple of grants. We talked about our NIPS. That's where the NIPS are.
Yeah, I think the grants, Mona, are pretty self-explanatory. The grants that come in, money goes out. I guess the next big one is probably jumping down to like police private duty.
Okay.
Which,
Yes.
it's probably
good.
self-explanatory for most of it. But
So, yes, for private duty, that is a fee for service. Any private duty job, we actually bill whoever requested the service. They are billed for the hourly rate plus an increase for benefits on top of that. The expenses that are out of there would be the actual hourly rate for the officers, the overtime there. And also at year end, we take a portion of that to cover any of the employee benefits. So we guarantee that at year end that they have to reimburse the employee benefit side at a minimum $120,000. So you'll see right now they're at 103. That by June will be down to a 0 because we'll take our portion. With that being said, they will still, because of the overhead, occasionally have portions in there. For example, at the beginning of the year, they started with $86,000. They used that and purchased 2 vehicles, about $45,000 each. And again, it's because of the timing of it. They opened the year with the $86,000, but it was taking forever to get vehicles in. So those expenses are in the current $774 expense. And again, the same for this year. So they do have a bit of a cushion in there that's allowed them to do the 2 vehicles, but as vehicle prices are going up, I think they're going to close out this year with the 0, and we'll just see what happens for next.
So the fee that's charged to whoever it is who hires the private duty officers, and so there's a cushion built in there above and beyond to cover the pass-through for the wages and with a markup for the benefits that's attributable
Right.
to that work. There's also an additional cushion, and it's the accumulation of that additional cushion that funded the 2 cruisers you're talking about?
No, it's actually what happens is the rate that they bill has to be an average rate because we don't know on the day of the service whether they're going to have a patrol officer or a sergeant, so we have to do a blended hourly rate when we're creating our billing rate rather than saying, well, today you had an entry-level patrolman, but tomorrow you actually had a sergeant, so we don't charge you the actual salary rate. We give you the blended rate. So it's the impact of the blended versus the actual is what gets the cushion. Some days some years there's a cushion, other years it is not, and it will go in the opposite direction.
Okay, so it just so happened that the projections based on pricing it with, the money that came in based on pricing, based on projections, it happened as kind of a crapshoot,
Right.
that the actual outlays were less, that created a difference, and that's what funded the vehicles.
It's usually based on the volume of private duty needed. So if they're paving Silas Dean, you're gonna have a lot of private duty
Right.
opportunities for the police officers to generate it. So if Eversource and the state are busy doing stuff, as well as the tree trimmers and all that.
But I mean, what I'm,
So
as I understand, but there's some years we're actually running it at a loss based on billing it based on the projections, and so it's just up and down based
would
on
be at a
happenstance.
loss. But generally, most of the private duty is handled by the patrol at a lower salary,
Okay,
probably below the average blended rate. And on occasion, you'll have some of the higher sergeants and lieutenants maybe taking a job or two.
so I mean, given that sometimes we're running at a deficit, should we maybe be changing the way we approach to calculating what's the blended rate?
I don't think we run into a deficit.
Okay,
No, I think they'll get
It's
close.
a
Yeah.
theoretical
They'll get close.
explanation, but in reality, we usually don't run
Okay.
into a deficit.
got it. Okay,
And they do look every year, and we base it on the actual salaries. You know, like I said, they're doing the blended, and we'll do the cushion that's built is based on the current health insurance rates. It's updated yearly, so I think they've got a good handle on it. But the goal is it's special revenue, we're not supposed to be profit-making, it's fee for service.
okay. Thank you.
I think the other things are self-explanatory.
Yeah, the only other one, the Silas Dean, you have a negative. I just assume that's waiting for
Yeah, you can see
reimbursement.
We
the
actually
word
just
in the
got-
explanation that's
Yeah.
causing the delay.
Yeah, and we actually just
Pending
received.
final review again?
Yeah.
Steve has a
It's a good
monster
one.
spreadsheet.
Yeah.
Okay.
And we paid the vendors, and we're seeking reimbursement for the last 6 or 7 bills. And
Right.
So how does it, just
We
so I understand,
actually received 685,000 yesterday, so
Okay.
it is a good thing.
so how does it, when it's negative balance, where's that money coming from that's fronting it for that special revenue?
Cash flow wise, it's still coming just townwide general fund, it's
Okay.
all cash.
Okay.
But what we'll find, what you'll see at year end, because, and I'll get to accounting maybe, and, but it'll become a receivable versus, on the budget, we're doing, budgetary, we're saying this is your budget, this is what you have to spend, because these have fund balances and they tend to roll over at year end. If this wasn't, fully reimbursed, we'll put in a receivable and go forward.
Any others anybody wants to go through?
Not by me, thanks.
No? Jeff?
Nope.
Thank you, Mona.
Welcome.
Before we move to the reserve for capital, how about if we go back and I'll make a motion to put the minutes back on the table?
Yeah, I'll second.
Okay. All in favor?
Aye.
And I'll entertain a motion to approve the minutes.
So moved.
I'll second. All in favor?
Aye.
Aye. One
I'll
abstention.
abstain.
Okay. Moving on to item 6, update reserve for capital, non-recurring expenditures through May 31st.
Okay, primarily the activity in this account for last month was related to appropriating money towards the Board of Ed's replacement of the roof at Griswold School. So the first thing we did is Mona posted our money that we received from Burris for the business development incentive plan that by them selling it forced a refund to the town. So we started with the 503,000 and so on. And then from there, we're starting to build up our balance towards the Griswold School roof. And we took excess funds from Stevens School roof project, as well as moving some miscellaneous repairs that we had in there that they had accumulated over the years, and got as well as the Burris money. So we're at 852 right now. And then what we're waiting for is the board to close out their year, with which they said they were gonna be transferring 800,000, say. As well as we have excess money in our general fund CIP this year. And between those two areas, we'd be able to transfer the money in there to get it up to our $1.6 million. Is that where we have to
It
be
was
at?
originally 1.8.
$1.8 million. So that's pretty much all the activity in the non-reoccurring fund account. So at the end of this year, we'll do those journal entries that will cause transfers into this fund to be put towards the roof replacement project.
Okay. And these are just line item transfers, that they're
Yeah.
not, nothing really happening.
No.
All right. If there's no questions, we'll move on to item 7, state aid for municipalities.
And there is no change in state aid. We should be expecting our remaining two pieces for next month, being in the Pequot and the municipal grants.
Okay. And then we'll move to our monthly financial report, and we tried something a little different this month. Instead of going page by page, I asked Mona just to prepare a summary, so we could put it all in one place. We still have all the detail behind it, so if there's questions, we can definitely address them. Mona, you just want to touch on any of the high items?
Sure.
Anything of specific on your summary?
Okay. So, yes, I think I was touching on it or a little bit earlier when we were talking about that tax refund, where it said if you see the following page with tax collection is at 99.75. It's about 150,000 behind where we should be. That combined with giving this $134,000 refund brings us to about a $300,000 under budget on the tax collection side, which is a bit of an issue. Not worried about the state revenues or any of our larger revenue collection areas, and interest was always a concern throughout the year. So overall, looking at revenue collections, we could be looking at about 300,000 under budget. Not a large amount overall. On the expenditure side, seeming like we are very close to the 100% expended, which makes that 300,000 on the revenue a bit of a concern. So we're watching things, we've been talking to departments, asking them to hold off on any, major purchases as we close out the year, pump the brakes a bit. We had the police contract settled and calculating the retro payments on that, because that was effective going back to 7/1 of '21. So that will come up into the next month's report. And all of the same items that we've been watching, just being concerns with fuel and so forth. We still have line items that are favorable, such as the amounts in contingency and debt interest. So it's a closeout, but I still think we should be a good year end.
Any questions?
I don't think so.
Okay, great. Good summary, Mona, thank you. Do we have anything for other?
I don't, no.
Entertain a motion to adjourn.
Move to adjourn?
Yep, second.
All in favor?
Aye.
Thank you. So if you just hit the